What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at the all-new stock, ticker symbol DJT, on a variety of time frames in anticipation of the next trading day, Wednesday, March 27th. Alright guys, so DJT began trading here today. I'm going to take a look. We only have one day to work with here, so this is going to be a little bit different than the typical day-to-day analysis that I'm doing. But let's do the absolute best we can to pull out some bias here out of today's trading day and levels that I'm paying attention to, areas that I expect to see elevated volume from traders, and finally, what we can pull out of the options chain. Now, something I'd like to just point out here quickly is if we look at the 1 minute chart, we see that we actually saw some really interesting little opportunities here on pull-ins to the 9 and the 20 EMAs. That's not something that I typically would trade on a blue chip stock, but that's something that I'll trade all day, assuming the volume profile. We see little fades in volume on the pullbacks and then pops in volumes on the pops in stock price away from the moving averages. These are the EMAs, the exponential moving averages. I prefer those intraday. I use the simples on anything 30 minutes and above in terms of charts. But I'll trade little pull-ins, again, assuming the volume profile looks good on stocks that are in play. And DJT was semi in play today. Honestly, not massively, but I expect it will be here in the near future. Now, if we zoom out, the stock was essentially, it was kind of flat today, right? Essentially, it didn't really end up net moving all that much, but we got a lot of intraday volatility. And by moving, I mean the closing price compared to where it opened, okay? Now, look, the stock is up a few bucks here in the after hours, but listen, as always, the after hours is going to see lower volume, so make sure you're taking that after hours movement with a grain of salt, whether it's in your favor or going against you, okay? What I want to do here, since we have to kind of, look at this a little different than, because we don't have a lot of trading history here, I want to look at the 5 minute and do our volume profile analysis, because this is something that is unchanged. Even with just a single day of trading. What we can do here is try to pull out as much intraday bias from the market as possible by peeling back another layer of that onion. Because the volume profile itself, in my experience, it does not at all. It has no obligation to be correlated with the price action, which is actually a really good thing. Because we can all look at the price action without, watching an analysis and know what happened. But when we peel back a layer, we can look and say, okay, so we saw this big fade into the close. We saw this pump during the lunch hour. Did the volume have anything to say about that? Was it unbiased? Was it actually biased in the opposite direction? Or did we see massive bias that fits with that price action? And believe it or not, we see all three of those scenarios more often than you may believe. So listen, if we take a look here, a few things that I want to pay close attention to. This initial off the open, all right, that move. I want to take a look at this intraday kind of lunchtime upside fade that we saw. And then, especially this dump off, that fade into the close from just above 70 bucks a share down to about 60 bucks a share. So let's take a look here, starting from left to right. Now, just for context, you'll learn if you stick around on the channel. Hope to see you subscribe if you're new here. Context is like the name of the game around here. Without context, nothing means anything. So, contextually speaking, the average stock, the volume profile is going to be usually one of the highest candles of the day is going to be the opening bar. And then we tend to see a fade off throughout the day, dipping through the lunch hour, and then kind of a U shape that ends the day usually somewhere between 1/3 and 2/3 as high as the opening bar. That's very common. Of course, we see a lot of variation, but that's kind of like the base that I expect. Now look, in terms of bias here, again, starting from left to right, this open, we saw a pop on really low volume comparatively speaking to the open, of course. This volume bar here was actually that pre-market pop heading into the bell. And then we saw a little bit of all over the place volume. Honestly, to stay unbiased and actually have this mean something, I can't give any bias to that open. There's really nothing there. This midday move, we did see quite the green versus red candle, green side bias, right? But a lot of the green candles, we got little pops out of context, and I'm always looking for out of context. Like, what's the average expectation? And then what I'm really looking for is like 3 or 4 or 5 candles consecutively that are out of context. We got little green pops, but nothing substantial. We got another one over here. Nothing substantial really. Perhaps there is a small bullish bias on that intraday upside move when we look at the volume profile alone, because comparatively speaking, the red candles that are mixed in were on average a little bit lower volume. Now, heading into the close here, this one, again, we have to remain unbiased here. This candle to me means nothing. There's too much of a risk of fooled by randomness when we're just dealing with one outlier candle, okay? But what we are seeing here is, even though we expect this acceleration into the close, that part is within context. But what we're seeing here is an acceleration into the close that actually peaked out a little bit before the close with, quite a few red candles, or consecutive red candles. What is that? 8 consecutive red candles. That is, a bit of a bearish bias heading into the close. And that does align with the price action. Now, I know a lot of you might be looking at this and maybe misunderstanding. You're like, well, of course there's bearish bias. In terms of the price action, yes. But believe it or not, what's really interesting is if you look at a move like this, I've seen it where we actually see quite a bullish bias. Maybe you have like 3 green candles that follow, for example, like 8 consecutive red candles. And it's not uncommon to see the volume profile completely flip the script and tell a totally different story. Now, interestingly here, based on the price action, you may be thinking, well, that's a massive bearish bias. And I would actually disagree. There's just a bearish bias in the volume profile. It's not massive by any means. It's not a complete outlier, the most ridiculous thing I've seen in days. It's not that by any means. It's just a little bit of a bearish bias heading into the close, a little bit out of context based on the consecutive red candles, along with that volume increasing just a bit early. All right. Now, the 30-minute chart. I really want to take a look at this and start taking a look at some channels. What's really clear to me here tomorrow is this is going to be likely a wide range trading stock for a little while here, and we'll talk about that in the options chain. The wide channel that I'm currently paying very close attention to is 80 on the top end and 50 on the bottom end. The reason I'm drawing that up to begin with is because if you showed this chart to anyone on the street, that's what they would come up with. And that self-fulfilling prophecy mentality tends to snowball. So you see the expectation of like, all the money can recognize that. So then the funds and institutions start saying, well, we need to pay attention to that because they're going to make decisions based around those levels, right? They start to program algorithms to make decisions based on those levels. And it's this snowball effect that makes the entire short term of the market a psychological, self-fulfilling prophecy, which is my entire belief system around TA. Those two are by far the biggest levels that I'm paying close attention to. But if we get a little bit more specific here, you can see that pre-market open, and then as well as like basically where we closed. Right around that $58 level. Listen, it's never going to be an exact penny, especially with a name that's expected to be as volatile as this one. I'm paying attention to that. Bulls, ideally, I would love to see, 58 to 60 hold. 60 just being a psychological level ahead of 58. I would prefer to stay above 60, but in the case of cracking 60 to the downside, 58 is ahead of 50, right? So I always like to have multiple levels ahead of that big level. In this case, that big level is 50. And if we want to get really nitpicky, there are a few more levels. One of them is kind of this like $65 region. I think it's worth drawing. And the last one that I'm going to pay attention to is kind of this, like we saw kind of a 3-bar top out for about an hour and a half, right around 75. All right, now listen, bulls, what I'm looking for tomorrow. This is a volatile name, okay? But let's just start off this way. I want to see 58 to 60 hold, okay? I want to see a push up to 65, a reclaim, and a hold. In that case, I want to see a push upside through what could be a psychological level of 70 up towards 75 and a hold of 75. Because what's the real kind of short-term objective if you're a bull? A break above 80, and I don't mean for 3 seconds. I mean a break above 80, perhaps a retest on lower volume, and then an above average or higher volume pull away upside, claiming 80 as support. That does a few things. That triggers scanners all around the world to pop up DJT. A lot more attention instantly, just like that, upon cracking 80. All of a sudden, the stock is in an open sky setup and is going to attract a lot of attention, whether that be from just retail traders, or I should say, institutions, funds, and algorithms that are programmed by the institutions and funds. A break and hold of 80 is a big deal, at least in the short term for DJT, okay? But those are the levels that it's going to take to get there. You know, that 65 and 75, they're a little bit smaller levels than like the 50 and 80, but they're there and they're worth paying attention to. Now, bears, you guys would ideally like to see a rejection of 65 upon any test on higher volume, but really a break downside through 60, through 58, get below 58 so that you're a little bit more in the clear for a downside test of your ultimate objective in the near term, a downside crack of 50. Okay, getting below 50 is I would say a big hit to the bulls' excitement, whereas you bulls, a crack of 80 is a big hit to the bears' excitement, and that's always your goal, right? Is to kind of discourage the other side. But a crack below 50 bears, that's really your primary objective, and do so on big volume with if you see a retest, I like retests for confirmation, low volume, and then high volume confirmation. All right. Now, let's see what we can pull out of the chain here. All right. The next expiration on DJT is March 28th. And the expected move by close on March 28th, which is Thursday, is plus or minus $13.11 per share. All right. Being that, it's not like if we zoom out, it's not like we have like earnings or anything, right, in the next couple of days. So we can say, just from a very primitive perspective, that those 2 days are semi-equal in terms of expected volatility. If you divide that by 2, the options market is currently expecting, assuming 2 consecutive green days or 2 consecutive red days, the options market is currently expecting something like $6.50 plus or minus per day. Of course, if you have a green day mixed with a red day, all of a sudden that expected volatility each day goes up, because now you have to make up for the plus or minus $13 per share move by the close on Thursday. That's the volatility expectation. Okay, now we couple that with areas of interest that we're going to see higher volume from traders. And we can also pull out one more thing, which is options bias. We had almost 350,000 total contracts traded today. 188,000 of those were calls, and 159,000 of those were puts. Okay. Now, in terms of delta ranges, we have kind of some weird data. This will work itself out over the next few days. And listen, if you guys like this, I'll continue to cover it. Let me know in the comment section if you want me to continue to cover this name in the coming days. If so, we'll end up seeing this clean up, and we'll get a lot more data out of the actual time frame breakdown, like the delta ranges, that actually tells us how the short-term speculators and the long-term speculators are betting. But on the overall, we are seeing, it's not overwhelming, but we are seeing an overall call side bias here in the chain on day one. Now listen, if you couple the analysis we've just done with the expected volatility out of the market coming out of the chain, which is, about $13 plus or minus $13 a share by Thursday, close on Thursday, which again, back-to-back days, it's about $6.50 per day. If you're somebody who looks at that and you're like, I think this thing's going to move a lot more than $13 in the next couple of days, well, then your volatility expectation exceeds the markets. If you have a strong directional bias to go with that, you're someone who would likely be looking at purchasing contracts. Okay, because purchase contracts will typically benefit from expanding actual volatility compared to the expected volatility. All right. And if you're somebody, for example, on the flip side, who thinks that this thing is going to go sideways for a couple of days and not move nearly as much as the market expects, and you have no real directional bias, well, then maybe you're an iron condor trader or something to that degree. Listen, when you're able to identify areas of interest, the psychology, the options bias, the expected volatility, and then you're able to look at all of these things and form your own expected volatility with your directional bias, all of a sudden that's extremely powerful. And listen, believe me, it sounds very basic. It's not that complicated, but most people aren't doing these things. Most people do the bare minimum because they see this as, well, let me just buy the stock and it'll moon, or let me just short the stock and I'll make money. And they almost never look any deeper. This is a profession. This requires effort. It requires a lot of effort. But like, listen, believe me, it's worth it. And if you're willing to put in the effort and treat this as an actual career or profession, something you're studying as if you were going to school for something, very top end, like being an attorney or studying to become a doctor. If you take this that seriously, it will serve you well. Listen, if you got value out of this video, please subscribe to the channel. If you'd like me to continue covering DJT, that feedback is tremendously helpful. I need to hear that feedback. Let me know in the comment section if you want to learn more. I highly encourage you to take a look at the Roensch Capital Gold server at the link in the pinned comment. That link, that'll allow you to get grandfathered in at the current rate. And I'll see you in the next one.